Adani Turbines. Ladies and gentlemen, it is a pleasure to have you with us this evening and a very warm welcome to you in this landmark session of IMA's Leaders Speak program. This is the 50th edition of the program, which launched IMA's digital transformation in April 2020. The country was frozen by the lockdown beginning in March last year, but the Leaders Speak initiative allowed IMA to reach out to its stakeholders and become an important platform for discussion with some inspirational and extraordinary leaders to get their insights to deal with an unprecedented situation. Since then, Leaders Speak has evolved into a platform for examining a wide range of issues concerning India's well-being, and we have hosted leaders from business, governance, diplomacy, defense, healthcare, science, and technology, and even spirituality. It has been a privilege to bring national and global movers and shakers on this platform for over the past 21 months now. Today, we are celebrating this milestone with one of India's finest financial services entrepreneurs and innovators, Mr. Sanjeev Bajaj. Sanjeev, it is a pleasure to have you on the IMA platform, and many thanks for agreeing to do this special session of Leaders Speak. You're a dominant player in lending, investment, and insurance businesses, and you're also set to bring a change in the payments market. You have been up to speed with digitalization, and you are launching a suite of online platforms for financial services. You have been continuously innovating even in a highly regulated sector, and you've created new financial products that are giving the fintech startups a run for their money. We look forward to hearing your views on looking beyond the pandemic and using this technology and innovation for building a digital, resilient, and financially inclusive economy. Thank you so much for joining us, and a very warm welcome to you. Nikhil, it is always a pleasure to have you join us, and thank you so much for agreeing to moderate the session. You lead a manufacturing group with significant presence in agri-processing, industrial engineering, and renewable energy. You also have a good understanding of finance. You worked with the financial services sector in the UK and the US before joining your family business in India. You deal with a cross-section of Indian population in your business, and you would know about the potential of technology and inclusion in determining the future course of Indian economy. We look forward to an exciting conversation between you and Sanjeev. Thank you so much for joining us, and a warm welcome to you. Ladies and gentlemen, the economy is emerging from the shadow of the pandemic, and the GDP growth has bounced back. The second quarter has shown major growth in every segment of the economy, and business and the consumer confidence has improved significantly. But just as we thought that the tide may be turning, we got hit with the Omicron variant, leading once again to uncertainty. Perhaps we need to live with persistent uncertainty and continue to look for new ways to rebuild and grow the economy. In fact, this is an opportunity to redraw the growth map for a digital, resilient, and financially inclusive economy. The pandemic has done more for formalization of the economy than the drives by the government and commercial inducements. Even the relatively poor have relied on digital payments and money transfers during the pandemic. Now it is for the financial services sector to build on this opening and aim for a broad-based financial inclusion by offering lending, saving, investment, and insurance products at all levels of the economic pyramid. Digital financial inclusion should not only be a means for tracing and tracking people's income and expenditure for the businesses to sell more to them, but also for the government to collect more taxes. It can also be a critical enabler of leverage even for the poor. Formal financial services can help everyone save, borrow, and invest more efficiently, and thus improve their earnings and spending capacity, which is critical for sustaining a high rate of GDP growth. The gaps in the reach and the portfolio of financial products must be filled quickly and adequately to make the economy stronger. We look forward to hearing more on this during the session. With these words, it is now my pleasure to invite Nikhil to conduct the session with Sanjeev. Over a fireside chat, hear from him on how the Indian economy can be made more dynamic and resilient and through financial inclusion in the post-COVID era. Over to you, Nikhil.
Thank you very much, Rekha, and a very good evening to you, Sanjeev. I think the audience you don't need to be introduced to the audience, given the successes that you've had in your career to date. But nevertheless, as Rekha said, it is our extreme pleasure to have you here for our Golden Jubilee IMR Leader Speak series today. It's a privilege to have you here on this platform. It's unfortunate that we could not do this in person, but we look forward to doing that in one of these days in the near future. Sanjeev, as Rekha said, the format of today's dialogue will be in a fireside chat mode, where I think that I would like to delve into certain topics, both from the perspective of the country, your company, as well as yourself, and to see how best we could lay out the paradigms from the priorities that we should be placing for both the country and your company, and as well as on the topic of digitization and financial inclusion, which is topmost in policymakers' mind, but also for each and every one of us as citizens. The economy seems to be on a good step at this point in time, thanks in large step to liquidity measures and also timely interventions by the government on a policy basis. But it seems that the formal economy is doing far better than the informal sector. Who better to tell us about this than someone who covers the entire gamut of financial services for every type of lender and consumer in the country. But at the same time, GDP growth has grown by about 8.4% its past quarter, and fixed capital formation as well as exports are at very high levels. Is this really representative of the aspirations of the country? But first of all, Sanjeev, what I'd like to do is ask you about COVID and the pandemic, which is a top of mind. How do you think COVID has impacted the financial services industry and the country as a whole? Have the interventions that the government took had an impact on the ground? And how do you see us coming out of this current crisis?
Nikhil, let me start by first thanking Rekha for inviting me again to speak today to members at AIMA. It's my first time, my second interaction with AIMA. The first was when they made the mistake of giving me an award a couple of years ago. And this is when I'm happy to be here to speak. And great to be speaking with you. Initially, I noticed CK was supposed to be doing that, and that would have been, I'm sure, fun as well. But for everybody over here, Nikhil and I go back a reasonably long way. So it's always fun to speak with Nikhil. We have seen the mother of all situations in the last year and a half. A situation that not only we, but even our earlier generation had never experienced. And we know that financial services as a business, whether it's about lending, whether it's insurance, whether it's asset management, where you're investing in other assets, it's all about managing risk smartly. It's about strong underwriting controls when you're writing a loan, when you're writing an insurance policy. It's about managing an efficient claim or a collection process. For example, Bajaj Finance, we collect about 20-25 million payments a month. All kinds of loans, small loans, big loans. Naturally, the most of them are small to medium-sized loans. So you can imagine what happens when there's a lockdown, right? Your entire collection apparatus gets frozen. And that's thousands of crores of loans that you're collecting. So now this is the entire industry. And this created a significant amount of shock in the industry. Yet, you have to keep in mind that the incumbents, the more mature banks, NBFCs, insurance companies, had a set of capabilities in place where they were able to quickly ramp up and put in place the right measures to manage in the first lockdown. On the other hand, the last 5-6 years has seen significant innovation, especially if you see in disintegrated financial services on the asset side, whether it is buying a loan, taking a loan. There are multiple people for a car loan now, for a personal loan now, all these fintechs that are there. There are platforms, insurance platforms like Policybazaar, where you can go and buy a whole bunch of products from. Many of these required or got into a situation where the capital that they had was not enough to take into account the potential losses that would come and have come over the last 18 months through this pandemic. And that has once again separated the men from the boys. So those that had poor risk underwriting practices, because one of the, I would say, was the right word, the good and bad of private equity is that without private equity, so many of these new entrepreneurs would not have been able to access capital. Imagine going to a traditional bank 10 years ago and wanting to build a Policybazaar or a Zomato or an XYZ, banks just don't understand that risk. So private equity on one hand has played a very strong role. On the other hand, those investors also need to make their money in a 10-year lifespan for the fund, which typically means in 5 to 7 years they need to exit. Hence, their focus is on building up businesses really rapidly and then leaving it to the next set of investors and management to bring in some amount of profitability. But when a pandemic like this hits, and a lot of those businesses are still ramping up on sales, but don't have risk management practices, good risk management practices. And I know that because we deal with a lot of them. Some of them are our own ex-employees who've gone and started those businesses. They got caught in a situation where the capital disappeared. And that's where, as I said, the men got separated from the boys. Now, this is where the government played a very significant positive role. First with the loan moratorium. We know it was there for 6 months last year. This was just for very common sense reasons that if the person does not have a job, if the person is not able to run his truck or his three-wheeler, if the small businessman is not able to open a store and make his sale, how is he going to pay back his loan? So you would have converted good quality borrowers into bad quality borrowers and spoiled their credit score. And that's where the loan moratorium came in. The asset classification freeze came in. That made a big difference. As you know, I'm associated with one other association, CII, and many of us represented to the government to provide liquidity support to MSMEs, and the liquidity scheme, including the first loss hit that the government introduced, the scheme for 3 lakh crore, which then got expanded to 4.5 lakh crore. They expanded the definition of MSMEs to allow many more people to avail of these loans, dramatically improved I would say, the health of the sector and kept it going through all of last year. Now, unfortunately, some of those small businesses, some of those customers who recovered from the first lockdown, in the second lockdown got hit quite bad. But the good thing that we've seen at least is the desire to pay back is still very high in India. And as a result, we saw as businesses started coming back, as stores started opening, cities, luckily in the second lockdown, went into micro containment rather than just blanket national or state level lockdowns. We saw that to be a much smaller number. And as a result of that, there were some losses that the industry had to take. But I would say overall, the better players have come out of it much stronger than the rest. But you know what this has also taught us is that when you look at this pandemic, you realize you can't anticipate everything. As much as we try, we plan, everybody has a business plan, everybody tries to look into the future and see how long and how far you can gaze. But nobody could have anticipated, and nobody anticipated a pandemic like this, right? So then the need for building agile businesses, the need for having a certain amount of prudence in your business model, the need for having that extra capacity, in our case, it meant extra capital, extra equity, the need to be more conservative, especially if you're a lender or an insurance company. This became very apparent. And some of us had already built in those capabilities into how we ran businesses. But for many others, it is the way in which you have to strengthen your business model if you have to build a good quality long-term business. There are many other, I would say, aspects of this pandemic and learnings, including digital adoption and others, but I'm sure we'll come to it.
Let me come to that actually, Sanjeev. But on this point of going through the first lockdown and the second lockdown, and now with Omicron, and we have no idea how that will play out, and possibly other variants as well. Have you seen a change in the resilience, not only of the industry of financial services, but of consumers also? As you alluded to the fact that you saw, even from the first lockdown to the second lockdown, an increased willingness to pay back and to be part of the financial system and the responsibilities that lenders took and individuals took. But has the industry learned, as you said, the big boys seem to have had the risk mitigation or the risk frameworks in place, and possibly those have actually been, over the course of this crisis, been a little bit more skewed towards conservativeness in this current market scenario. But what about the other ones? And is there differentiation from public sector to the private sector and to the fintechs in this word of resilience and being able to take things forward on a steady state basis going forward?
So let me actually take this question for different groups of participants. Let's look at consumers. Very clearly, most people who are middle class and above didn't lose their jobs last year. Of course, some got badly affected health-wise with the pandemic. But most of them ended up saving money through this period of time. And we've seen them after the first lockdown come back and start spending again. After the second lockdown, we've seen, for example, in the festival period, the Dussehra to Diwali and equivalent periods in the South, record sales in consumer spends, other than for categories of products which have your chips in them, because as we know, there's a worldwide shortage.
Not available.
So it still makes a big difference for manufacturers, because overall numbers, when you look at mobile phones, even the smart TVs and all have chips. So as a result, a lot of people have not done too well. But if you remove those category of products, then consumers have gone and bought a lot. But this situation changes when you look at the lower income classes. And a clear example of that is when you look at motorcycle sales. So large number of motorcycles get sold to people in lower income. And those are the 100cc, 125cc type of motorcycles. And this sector has continued to suffer the last year and a half. It saw a couple of good months, but overall it hasn't. And we think a large part of that is that lower income people are the ones who suffered economically, in addition to suffering on the health side through the last 18 months. It is also relevant for the small and medium businesses. Many of them have got wiped out. I went to a school near the Bajaj Auto factory where most kids' parents came from the neighborhood. So they belonged to the middle and low middle income. And so a number of my school friends run small businesses, very small businesses, or run small restaurants. And they've gone through significant amount of trouble. Some of them have had to shut down, especially at the end of the second lockdown. They took that additional money in the first lockdown to manage to beg, borrow, steal, and get their businesses up. But the second lockdown hurt them quite a bit, even though I must say overall that is a much better planned lockdown, but it hurt them quite a bit. So products and businesses relating to purchases by lower income, I would say, part of society, and the informal businesses have suffered quite a bit, while the middle class and above has come back. Across all this, what we continue to see, as I mentioned earlier, is a very high desire to pay. So we see that even the ones who are not able to pay every month, as they get part of their money together, they end up going and paying. So this credit, I would say, culture, which is part of, as a society, it's been ingrained in us. Don't take debt, keep a manageable level of debt, pay back early. For example, home loans in India are 12 to 15 years, but the average home loan doesn't last more than 7 to 8 years. Because even amongst people who take a loan who are in their 30s and 40s, which is our generation, people like to pay back early. So I see still for this to be a very strong sign of the essential ethics of the individual Indian. But yes, many of them at the lower end have suffered in this period.
Thank you. But Sanjeev, I think your resilience through this has been your investment in digitization, starting from the late 2000s and early 2010s, and capturing better data, getting better risk practices, and ultimately relying on data. What has been your journey in digitization? And I'd then like to take that on to actually seeing how that has been able to impact your business. So could you tell us a little bit more about how you have used digitization in your company to mitigate the risks that you have seen broadly in this sector, but also to cater to the growth that you had to face?
Actually, that's going to be a little bit of a long answer, because that's really at the heart of what we do. At a broad level, I would say that even before I talk of digitization, to build resilience, you need anticipation. But as I said, you can't anticipate everything. So you need agility. We've been agile as a group of companies, but we've further acted on it in the last 18 months. You need to build extra capacity. In our case, that meant to have extra capital, extra equity, and prudence. In our case, prudence has meant early recognition of possible losses, providing for those in our quarterly financials, so that many of our businesses are listed. We don't provide shocks to the market. We started last year providing monthly data from April last year in our lending business in Bajaj Finance, some of the key performance parameters month on month to the market, so that the market could see how our business was growing or not, and continue doing that through a tight period. After that, we've gone to a quarterly basis. So the whole idea is, without giving out unnecessary competitive information, how do you keep market, the investors aware of how things are changing, especially when they're going for the worst, but in both situations. And then it's up to them to decide whether to invest or not in your stock. So we've been doing that as well. Digitization for us has very much become a way of life. I remember 2007 end is when I left Bajaj Auto and moved towards our financial services businesses. And we were very clear that unlike a motorcycle business where you can, build this real stylish, sporty motorcycle, when you started, the roar of the engine and the 0 to 100 acceleration is something that the buyer is willing to pay that premium pricing for. I just somehow couldn't find an equivalence for that in a loan document or an insurance policy. So eventually, if somebody is looking for a loan, they're trying to find at that time what's the cheapest interest rate they can get, what's the highest discount that you can get on your insurance policy. And we said, how do we make a difference to customers? And we said the difference we can make is in the overall experience. So at that time in 2007-8, if you wanted a television loan, it took 3 days to get approval. We worked, and that's where I'll come to the digital part of it, but we worked on our processes, our data, and in 18 months brought 3 days, which is what the market used to take, to 3 hours, and another 12 months after that to 3 minutes. And for the last 5 years, we processed most of our loans instantaneously in less than 30 seconds. In the same way, when it comes to insurance, we were very clear that when people are buying insurance, the moment of truth is if you have a claim, how fair and fast is the insurance company. So even in 2007-8, when a lot of our peers, to cut their costs, were going out to outsource providers to manage their claims, we decided that this was part of the heart of our capabilities. And we kept claim management for a very long time. Even now, majority of it stays within. Even at that time, we had over 200 doctors managing health claims. We had over 800 engineers managing our motor claims. Motor portfolio is a much larger portfolio for us and for the industry. But the whole idea was to build focus and capability where it makes a difference to customers. We launched now on our motor insurance app last year a process where if you've got a motor car insurance with us and you have an accident, the app allows you to take a bunch of photographs in a particular sequence around the vehicle. And in less than 20 minutes, we'll provide you with the claim amount. And we have seen that 80-85% customers find that as being fair. So we will put that amount into your bank account, or you can send the vehicle to one of our authorized garages to get it repaired. So the entire process, imagine, otherwise people are at work, you have to plan for a surveyor to come, the guy will come, he'll take a look, he'll go back, it will take a few weeks to come to know whether the claim is passed, not, for what amount of money, then you have to go and get your vehicle repaired. Here, the whole thing happens instantaneously. Now, how it happens is, one, how digital are you? How easily and thoroughly are you capturing data at the front end with your customers? From pre-sales to when you sold the policy to the claim at the time of claim, when the person is paying back the loan. How are you organizing that data within the organization? What are the digital frameworks? What's the technology architecture that you've put in place? Third, what's your capacity to ramp up? I mean, when you have some of these mega sales on these e-commerce platforms, or even on days like Dhanteras, we will go and do 200,000, 300,000 loans in a day, from otherwise doing 60,000, 70,000, 80,000 a day. We will sometimes in half an hour approve 100,000 loans. Now, you can't have that kind of unlimited capacity if you're basically going to have your entire data systems and your computer systems on-prem. So right in 2008, starting with Bajaj Finance, we adopted the cloud. And we worked with one of the, at that time, the larger CRM platforms, cloud-based, called Salesforce.com. They're a $300 billion company as well. And they've grown over the last 10 years handsomely. But we went to them because they had this unlimited capacity in the cloud. But they were a CRM platform. And we together worked and created a loan origination platform in the cloud. So much so that over the years, the innovation that we have done with them, they've signed up with us 3 or 4 years ago to co-own a whole bunch of IP that we've developed together globally. And they count us amongst their top 7 or 8 global innovation partners worldwide. I remember going and seeing their CEO prior to the pandemic. Every 18 months, we used to go and do these relationship calls. So I met with one of their CEOs 3 years ago in San Francisco. And he told us, he said, Sanjeev, we are growing so fast that our customers actually complain that we are moving too fast for them. He said, it's only once in a while that we come across a customer who's moving too fast for us. And you know, that's the kind of mutual respect. In the same manner, we run a bunch of our other platforms that we'll talk about, digital platforms, on the Azure platform. And Satya Nadella, when I first met him 5 years ago in his office at Microsoft, he said, Sanjeev, when I look at you, you guys are a technology company that offer loans. You're not a lending company, because we can see what you're doing and we are thrilled to be partnering with you. So much so the last 5 years, whether it's Salesforce, whether it's Microsoft and a few other partners, we have access and work with their global R&Ds, which normally they would not open up to most of the players. So there is a lot of work that is gone around the cloud, around how we manage data, how we have built our digital platforms and the API stacks that we have built to be able to link with multiple partners. And as I said, I can talk a couple of hours for it because there is so much that we end up doing. But the heart of all this is actually building a culture that is focused on disruptive innovation. We run hundreds of projects across our companies every year that comes through a more institutionalized, longer term strategy, I would say, initiative that we run every year. It's about putting in place teams with youngsters, non-hierarchical, running those teams. It's about making mistakes early, learning from those failures. Because if you don't push the boundaries of what you're doing well today, you will never end up discovering what's better tomorrow. So you have to build a culture that encourages early failure. have built and continue to build a highly entrepreneurial culture. Our teams, and in each of our companies, the top 150, 200 people, they are not told how to go and run their businesses. They're given certain boundary conditions. They go and define what their business plans are, which we monitor, we challenge, we push them, we encourage them, we support them. And it is this entrepreneurial zeal, it is the experimentation, it is knowing that it is okay to fail. It is this culture that over the last decade and a half has helped us create, where we can today see the digital avatar of it. But I'm sure this will keep evolving every 5 to 7 years. And a big challenge for us is, as we're getting bigger and bigger as a set of companies, how do we continue to keep that culture going? And that's why, other than in certain key roles where we don't have the knowledge base inside and hence we have to hire laterally, we try and see that and I'll come to that if we have time, how we work on preparing people to handle multiple roles within our organizations itself.
I think you bring up very important points, Sanjeev. You should know that we've already hit our limit of participants on Zoom. And so as it is, we've moved people onto our streaming services. And usually we have over 1,000 odd people who end up hearing these sessions. And so very frankly, this has exceeded all expectations. But a lot of the participants are not only members of IIMA, but are also MBA students who are key stakeholders in the management ecosystem of India. And they, of course, would like to know what it takes to get hired within the Bajaj Finserv family. And I'm sure that you've alluded to it. So you've given them some pointers already to be more entrepreneurial, to look at things from an agile perspective, and to continuously learn and challenge yourself, and to not take failures in a negative sense. But before I move on to subjects like that, maybe we could finish off with a topic of digitization and view this from a more global context. In some of my interactions, I was told by some investors who had invested into Ant Financial, which ultimately was not able to go public because of the Chinese government cracking down on them, that they controlled about 50% of all retail lending in China. And the real concern that the Chinese government had was the fact that they didn't know about the way that the data was being captured and garnered by companies like Ant Financial and Didi. Do you find a more enabling environment in India? How are we different from what China is doing? And especially if we look at it from a more macro perspective, financial inclusion in India is far higher than it is in China, according to the data that I have in front of me. How can we, and how can Bajaj Finance and Finserv push this further? How can you go on from the 2 lakh loans a day to 5 lakh loans a day? Is that something that you need an enabling environment for? Is that a question that you need some government assistance? Or very frankly, as you rightly said, you are more of a technology company now, and scalability of that can be done through other means such as AI or ML or a variety of other means. But do you need people on the ground? What are these people meant to do? I think there are many questions that I've laid out there, but however you'd like to tackle that, I leave it to you.
Sure. Let me take these up as sub-questions. First is India and China. There's some similarity, which is both large countries, both went digital. China went 10 years before us. Both created businesses that focused on digitally offering small value financial products, loans, investment products, payment products, insurance products, and created a very large market opportunity for small ticket value, very high volume, which is very different from the West, which is still reasonably high ticket and nowhere near as digital. But the difference between China and India, other than the fact that India came later, so we still have a while to go to come to their scale, is that in China, there was no regulation when this started about 15 years ago. So you essentially had a few large business groups, and being one of them, Tencent, which has the WeChat messaging platform, the largest messaging platform, JD, yet another, who started creating their own digital protocols for understanding the customer, IDing the customer, so digital IDs, creating messaging platforms for customers to interact on that, then putting in place different products from shopping to movie tickets to getting your food delivered to you. But the digital protocols and the payment protocols were unique for each one of them. So you had to be within that ecosystem to benefit from all those products and services, and they were each large ecosystems, but the ecosystems didn't talk to each other. So, so people would have multiple such apps to deal with the individual ecosystems. In India, what our government did right from 2008 is first, with the focus on what's now called as JAM, the Jan Dhan accounts. Now we know almost 450 million of those. With Aadhaar, the digital ID, which was part of a larger stack of digital protocols that the government created called the India Digital Stack, which also includes digital KYC, digital signatures, the payment protocols on the basis of which UPI came up, and a few other things. The government created this very early on and said, this is now open for everybody to work on this. So you didn't have to go and create your own protocols. Plus now, whether you were a large bank or an NBFC, insurance company, or you were a fintech or an insurtech startup, your playing field was level. You each had access to customers because the customers use the same protocols, whether to take a loan from X or Y. And we saw in the early years that a Paytm or a MobiKwik or others built again their own merchant ecosystems where only their payment app would work. But once UPI came, all that money gone in building all those merchant networks went down the tube, because now anybody could use the UPI app. You didn't have to be wedded to any one particular digital provider. Hence, the digital stack that the government created has been the single biggest differentiator between China and India. On top of that, the government has now announced last year their digital health mission. And we have a digital health solutions business that we've launched a year and a half back, where what the government is now saying is, all your digital records, from your prescriptions to your health records to details on your medicine, we are going to create again a set of digital protocols for this to be read by doctors, by hospitals, by clinics, anywhere. It is not proprietary the way it is today. Today, the average Indian moves every 5 years to another job, very often changes cities. When you move to the next city, you may have some of your health records, you've taken an X-ray or a blood test, but all your prescriptions, your history with your past doctor, and for most people, even if they've got some of their scans and all from the past, nobody has that organized in a manner. That scan probably works on a GE machine in one city, but when you go to the hospital to the next city, it's another machine, a European machine, which doesn't read the same scan. So by creating this health set of health protocols, I think we are going to revolutionize the health industry in India. For MSMEs, as you know, the government created the GST platform where all their GST information is available to financial providers. They've further expanded that to what they call as their Ocean platform, which is basically a credit-enabled platform where lenders can provide credit, all kinds of credit to MSMEs. Now, look at the possible future power of that. Today, an MSME gets caught with the local bank, past relationships, father had that relationship, has to pay whatever processing charges, maybe something under the table, whatever interest rate those people charge, because he does not have access to multiple banks and NBFCs that are willing to offer him a loan, unlike a large corporate does. On this platform, with his cash flow data available, with his GST data available, it will create, I would say, a democratic market between the borrowers and the lenders. So this is where India is doing things very differently. We are doing it in an open manner, which is great for every Indian and every Indian business. It is also great because it is on a set of common protocols. So it's very easy for all players in the market to read. And third, it takes away the dominance of the large players who can create closed platforms for themselves. So that is where India is making a very big difference. And we, for example, or I'll come to our business a little later, talking about financial inclusion, see, when you talk of financial inclusion, one, there is so much opportunity in India. We've just barely scratched the surface in the amount of loans and insurance that we provide, the mutual funds that the industry sells is a fraction of what is possible around the world. Keep in mind, India is now at a per capita GDP of $2,000. And we have seen globally when markets moved up beyond $2,500 a year, the incremental money per capita income all went into discretionary items, into savings and investment products, because that $2,000 is what you need to take care of your basic life and your family. So India is on that cusp, and that's why the next 10, 20 years will see tremendous growth in India across, I think, all kinds of businesses and hence financial services as well. Yet when you think about it, it is odd that a country like Sri Lanka has more banks than India does. The US has 7,000 banks. It has small community banks. It has digital banks. It has banks focused only on SMEs. It has banks which are regional. And then it has the large banks. In our case, even the small finance bank is nothing but the same set of rules, but you're a small bank instead of being a big universal bank. And I think that is where, of course, we've seen the Niti Aayog draft paper that just came out last week talking about digital banking, saying that why can't you have branchless banking? Why can't you have a set of bankers or entrepreneurs who say that, you know, I'll set up a digital bank and I don't have to be all over. And if it's digital, fine. I'm accessing customers maybe initially in the top 100, 200 cities in this country. Maybe I'll have 1 million customers in 10 years' time. I'm happy. I don't have to be the next State Bank of India or HDFC Bank. But for those million customers, I can provide the best customer experience. I can provide them with multiple products. I can have a nice, profitable business, which is catering to a set of requirements for that evolved digital customer. So far, you can't do that because the regulator will tell you, no, you need to have a physical branch. You need to be in rural India. Every PSU bank and private bank complains about being forced to open branches in rural India. They all say, we lose money. Why are you making us do that? Bajaj Finance has 2,000 rural branches. We break even in less than 12 months in every rural bank because we didn't go about it as it being forced upon us. We saw it as an opportunity. We said there are youngsters in rural India who also want a 40-inch LED TV, who also want a smartphone. Okay, they may not pay 70,000 for an iPhone, but they want to pay 30,000 and get equally effective smartphone. They also want to go on a holiday and take a loan. They may not go overseas, but they will go to Goa. Why can't we find a way to access them? And we did that. We even lent to MSMEs in rural India. And we make a decent amount of money. Actually, overall as Bajaj Finance, our loss ratios are amongst the lowest in the industry, but our rural loss ratios are even better than our urban loss ratios. So there is enough opportunity for financial penetration, expansion, but we need more competition. Only then we can shake these old banks who, let's be clear, they are being very smart. They're making good money by doing a limited amount of things. The private banks are shaving off a few percentage points from the public sector banks every couple of years. So they keep taking the low-hanging fruit from them. And there is so much low-hanging fruit because public sector banks still make up 70% of the banking industry. Public sector banks don't know what's hitting them from the efficiency of the private sector banks and people like us to not being incentivized as a management to go and take on additional manageable risk, to getting put in jail if, many years after retirement, if somebody goes and feels that you've done something wrong. And we know all those stories, right? So it's tough for them as well. I think this model has to change. We have to focus on innovation. We have to take some manageable risk. We have to open up banking to many more players. We need 100 Bajaj Finances in this country. We need the innovation and the challenge that the fintech, the insurtech industry is bringing in to the industry, because they don't have some of the strengths of the incumbents. They don't understand risk. They don't understand underwriting, they don't understand collections, but they understand the customer. They understand how to seamlessly approach the customer. They have the stickiness with the customer. And that's where the interesting duality of this industry is, that the core capabilities lie with the incumbents. In financial services, you make most of your money on manufacturing loans and insurance products. On payments, you make no money. Look at the large payment players. The largest one last year, what were their revenues? 2,500 crores of revenue, the largest player. Losses, 2,500 crores, 4,000 crores the previous year. Where is the money? Because this eventually is only plumbing. And for plumbing, customers will eventually only give you a few pennies. So the money is in manufacturing. That capability is with the incumbents. But the customer is with the new fellows, the digital customer on the network.
Exactly. The UPI has made it completely democratic.
Correct. And that's the gap that Bajaj Finserv and our companies, Bajaj Allianz, Bajaj Finance, our housing finance company, our securities business, the mutual fund that we want to launch next year, that's what we are trying to do in bridging that gap, because we've got the manufacturing capabilities. My team and I spent the first 10 years from 2007 in building solid businesses in Bajaj Finance, our life insurance, our general insurance, our housing finance. And then 4 years ago, we started building the right digital platforms. So we have a digital platform for loans. We have one where we've connected 100,000 retailers to an online store, because as they tell us that, we can give the same discounts as an Amazon or a Flipkart, and we are present there as well. They said we can give the same discounts. We can send the phone or the television home in 2 hours. But if the digital customer doesn't come to us, so we said, okay, our role is of an enabler. It is not about choosing X or Y. So we created what we call as an omnipresent strategy, taking into account the physical availability, capability, and interests of these 100,000 stores, and building a digital e-commerce platform where they put in their products, and we will build that out. We have an insurance platform that is getting ready. There's a payment platform that we are just going to launch soon, and an investment platform. So we are building out these digital platforms. We today in Bajaj Finance itself have set 50 million active customers, all KYC'd. You should ask the biggest payment company how many KYC customers they have. They don't even have 20% of what we have. So 50 million KYC customers. Our insurance business has another 70, 80 million customers, of which general insurance currently does not require KYC. So it's voluntary. So as a result, about half of that is KYC. So we have 100 million customers to work with who come and access our platforms on a regular basis. And we've got the manufacturing businesses, which is where, as I'm saying, the money lies. Our role is, how do we keep bringing this together? How do we keep improving customer experience, provide products in an intuitive manner? And then whether it is in the big cities or it is in the small villages, we believe that the opportunity is limitless.
I think, Sanjeev, the way, as you put it, your growth seems to suggest that there's a high degree of customer satisfaction on your platforms, and that growth is something that everyone cherishes. So everyone looks forward to your new platforms, and including health, which you mentioned that you will have a product coming out. The fact that the government looks at savings in a narrow mind, but very frankly, I think that change will be underway, and we all look forward to the changes that Bajaj and Bajaj Finserv and the entire group of companies will lead us on. But coming to you personally, Sanjeev, I think we have this session until about 7 o'clock, and so I did want to take some questions from the audience. So to the audience, if I could request you to put your questions on the chat box, Rekha will get them to me. But I'm going to take the liberty of asking some questions about yourself as a leader and the priorities that you place. How do you look at the different avenues of growth that you have and the challenges that those present from a capital allocation perspective, as well as an empowerment and leadership perspective? How do you view your role as the chairman of a behemoth? You mentioned earlier that Salesforce and you are now $300 billion companies each, but I think that you've surpassed them and you will continue to surpass them in market capitalization. So many congratulations on that, because you truly are a digital technology enabled and technology company now. So where are your priorities? How do you see your day on a daily basis? How do you plan your time as well as your capital allocation from a company's perspective?
So I basically get smarter guys who are more intelligent than me to come and work. But more seriously, as I said, there are four, I would say, four main pillars which have helped define our culture. One is focus on building long-term, sustainable and profitable businesses. Long-term is very focused because very often otherwise as management, we can get caught up in short-term profit opportunities. But if that takes you away from your long-term goals, then know that it is okay to prevent them or avoid them. Second is this balance of profit and growth. If you have to build a long-term sustainable business, it has to be both growth focused. It also has to make money, which allows you to reinvest for the future. So how do you make decisions which balance those? Because every decision doesn't necessarily balance both those, but a combination of decisions can. Second, as I mentioned earlier, is a big focus. The second pillar is disruptive innovation. And focusing on that, because otherwise we are in a very commoditized business, just doing loans and insurance products. And hence, keeping the customer foremost in mind, whether it's the end customer, whether it's our intermediaries and other partners we deal with, or even how we enable our employees, and maybe I'll come to that also in a bit. How do you keep disrupting yourself? We've been fortunate in the last few years to win a few awards, and we go celebrate, we have a big bash. The next day, the award is locked up unless we have a visitor coming. And it's, as Bezos says, it's back to being day one. When we look at our major processes, see, one of the things we learned was that a lot of these insurance companies and banks, because they are heavily regulated entities, like we are as well now, you're handling the public's money. As a result, over a period of time, you end up building your technology systems on the back of earlier systems, and you come to a situation 20, 30 years down the line where you don't know what you had built initially because those people are gone, those systems are defunct, but you would still keep managing them because you can't afford to tear those apart. We are very clear that every 3 to 5 years, if we find that we have a set of processes that have stayed as it is, we tear it down and rebuild it. So that we are in a constant state of change. But what it does is, while it does create some amount of loss of continuity, but it always ensures that your basic technology framework and your processes are aligned for the future. So disruptive innovation comes in that. A third pillar is lean operations. And this is from my Bajaj Auto days, where because of our association with the Japanese company Kawasaki, we learned how to convert our plants and processes towards the Japanese way of lean manufacturing. And I'm sure so many of you all know and do that in your own businesses. We took that to financial services as well. I mean, when we are processing 100,000 loans in an hour peak period, or we do typically 2.5, 3 million loans a month. We do something like 10 million insurance policies a month. It's a factory running at the back, getting that customer information, processing the documents, approving the loans, making sure the money is given to the customer, taking back the customer payments, and running those efficiently allows us to save every rupee, which either goes to the customer in a better offering, it goes to the employee in higher incentives, or it comes back to the shareholder or the community. So lean operations is the third pillar. And the fourth is accountable empowerment. I've always believed that for those of us that come from a promoter family, you get a lot of space in which you get to work within a certain set of boundary conditions that may be defined by the board or by a family in a non-listed entity. And that's the kind of environment we have tried to create in our companies, where within a set of broad guidelines, people can go and build their businesses out. They present those plans to us, and I'll come to now the how we do this. So these are the four pillars. Over the last decade and a half, we run every year a multi-day strategy, I would say, session, an offsite, which ends up involving anything between 500 people, 500 and 1,000 people from each of our companies. So each company does it independently, but we also have a few key people, including some youngsters from each company attending the sessions of the other companies. And this is where the teams would typically 2 months to 3 months before this offsite look at ideas for the future. And we tell them that think of it from a 5-year perspective, because in 5 years you can do anything you want. So you're not in any way limited by what you're doing today. And then they present those ideas with reasonably detailed financials and a roadmap. And typically over 4 days, we would go through 100 such presentations. So they end up being very long days, starting at 8 in the morning, very often going till 11 in the night. Of course, after that, you go drinking. So the next day starts hard, but you go and do the same thing again and again. From that, about 60-70% projects get taken up, which are then budgeted with timelines. Some are 3 to 4 month projects, some could be 12 to 18 month projects. But these are what end up creating our future revenue, profit drivers, the future innovation. Something can be on the operation side, something can be a new business idea. Our entire rural entry was one such presentation that came up. And very often, the cross-functional team that presented this in a strategy meet, many of them will elect to go and build their business out. And that's also part of their entrepreneurial culture. They go and build it out as their business. Because they said, this is the plan we presented 2 years ago in our annual strategy meet, and I get to now be part of the team that's building it out. We make sure that we encourage people to move roles every 2 years, maximum 3 years. People move from operational roles to business roles, to HR, to finance. Finance, you need, of course, certain basic skills. There may be certain specific roles, like in analytics, in risk, which require certain skills. But even there, we encourage people to move around so that you end up building better capable leaders. We started an online job posting platform within Bajaj Finance 7 or 8 years ago, where every month about 500 new roles are posted, and the requirements are very clear. If you meet those requirements, if you spend at least 18 months in your existing job and you meet some of the requirements, you can apply. And if you get selected, your boss is only told that between 30 and 90 days he has to release you. He can't hold you back. So the best people can move up. Our entire 95% of our employees across our companies are on monthly or quarterly incentives. Of course, on sales side, on ops side, it's easier to define those targets on a daily, weekly, monthly basis. But even people that are on projects, we define those, we have fine-tuned it over a period of time. And it's all transparent. It's on our HR platforms, so that the youngster who does his target for the month or the quarter gets paid. No questions asked, no politics, completely transparent. Like we have the internal job placement program, or the platform, we expanded it, and earlier this year launched it across our group. And now we are posting jobs across our financial companies, so that even though we are based in Pune for our head office, we have nearly 10,000 people here across our companies. They get much larger opportunities now, wherein I believe in 10 years' time, people who are in their 30s, by the time they get to their 40s, would have worked in at least 2, if not 3, 4 of our companies and form that senior leadership cadre of us. What better way than to get people prepared to build out the future of what the Bajaj Finserv companies should be. And to the MBA students that are there, we hire from the top colleges now the last few years. Till 5 years ago, nobody from the top colleges wanted to come to us. They said, who's Bajaj Allianz, who's Bajaj Finserv? We don't know them. We love the consulting and the private equity guys. We have a very interesting gaming platform for MBA students called Atom that we launched 4 years ago. And we essentially took real life, I would say, problems. We took some of our simpler projects, converted those into games. And you can either be an entrepreneur in that, or you can be an investor. And we run this across, I think, 40 or 50 colleges around the country. Last year, if I'm right, we had 4,000 or 5,000 students playing it. and the top 10, 12 get called to Pune for presentations, and then there's awards and stuff. But that's how people get to know about us. And now we are hiring from the top colleges. We have a group young leaders program where I take it FinServ group level. These individuals that come from the top MBA schools around the country are groomed and mentored over a 3-4 year period. And even then, when they go into each of our companies, we hope to continue monitoring them through their careers with us. So there are a number of initiatives this way in which we are trying to continue to build that culture. Because many of us that were in our 30s when we started doing this are now in our 50s, early 50s. So we are very clear that we've had a great run over the last decade and a half. Our responsibility now is to continue to create that enabling environment so that those in their 40s can now come and do what we did in the last 10, 15 years. And we start looking at the guys who are and girls who are in their 30s, so that over the next 10 years, we enable them to take us to the next decade.
It seems that the culture that you've built in Bajaj FinServ and Bajaj Finance and the subsidiary companies is truly unique and something that's very forward-looking. Since I put it out there to the audience to ask questions, I've been flooded with questions. So unfortunately, Sanjeev, if I could take 10 more minutes of yours and ask you a couple of questions as opposed to the entire list, I will send you the entire list of questions just for your information, along with the people who have sent the questions. The questions, if I can generalize them, seem to be around the learnings that other companies should take, especially in the MSME sector, through the course of this transformation that you've gone through in a much larger capacity. How would you encourage, or what are the points that you would encourage management or leaders in these companies to look at in this transformation, and how best could they train their managers to be able to deal with this transformation, which is necessary?
So let me say a few things. One, find your North Star. I remember after the first couple of years of running our annual strategy offsites in Bajaj Finance, we said, which is the best bank in India? It's HDFC Bank. Let's strip down everything they do, learn about that, and then try and be as good as they are, if not better. And we did that for a couple of years. So we compared, we benchmarked everything that they were doing and saw how we could then try and do that better. And then that went into the project modes and everything else. I remember 2 years after that, we picked up one of the top performing consumer banks in the US, and Wells Fargo. Of course, they later on got into trouble for pushing too many products down the throats of customers. But they had some very interesting processes, and we benchmarked them in very high level of detail. Thereafter, as the digital world about 5 years ago started developing, we said that this is not about financial services. This is about how we interact with customers and who does that best. And we went and benchmarked Amazon. After that, we've done Netflix and many others. Netflix is the best at telling you what next to watch. So we said, okay, how do we decide on what next to for customers to buy? So we've always picked a North Star, which we believe can help us connect with a better way to doing things, even if it's not from the industry. And that's one thing that I would suggest to each one of you all. Find your North Star, and that North Star may change every few years. And there's enough public information. We didn't go to any consultant. We just put actually a bunch of young graduates, and within a few weeks, they had stripped these companies from their financial information, from market information, and given us enough to work on. So that's one. Second, right from 2007, 2007, Bajaj Finance was about 250 crore market cap and made about 10 crores of profit a year. We couldn't afford to pay high salaries to our people, and we couldn't afford to get the top talent from the industry. But even then, the few roles that we decided to change, we went and got the best talent that we could afford. And every few years, as we grew and we could afford more, we ensured that we paid even better. And the last, I would say, 7-8 years, we are probably amongst the best paying in the industry. But we have a very high variable component, linked to, as I said, very clear performance parameters. And even for the front-end salesman sitting in the store, if, for example, their annual salary at the front end is 2.5 lakh rupees or 3 lakh rupees, many of them will take incentives of 9, 12, 15 lakhs a year. Because very early we said, if he's doing more for the company, why should we cap the benefit to him or her? Let them make more money as well. And we find that way that the smarter ones then even move up the ranks to doing more stuff. So pay well, get the best people that you can afford for your size of business. Third, spend some time thinking about the future, especially with your senior management. That for us is our annual strategy meets. And from that, identify a set of projects, give it serious time and effort. At one time, our mentor, Nanu Pamnani, and I used to monitor these projects across our companies every month. Now that the companies have grown and our team has matured, we do it every quarter. So I actually spent 2 days last week with one company. I'm spending tomorrow whole day with another company, just going through the key projects. And actually, these are not all the projects now, but the key projects. So always invest in your future ideas and run small projects, run small pilots to see what will work for you. And the last thing I would say is empower your people. Get the best of people, really get people smarter than you, incentivize them right, give them the right tools, empower them, hold them accountable, but empower them, because only when they feel and they get rewarded as owners will they give you their best.
I think that everyone would like a boss like you, Sanjeev, who empowers their employees and also encourages them to take risk and rewards them equally if they're able to perform. You brought up Netflix and the fact that they really are a benchmark in terms of data management and predictive analytics in terms of what to watch next. But they also have that set of problems, and I'll give you my problem that I have with Netflix is that my wife uses my account when she watches Netflix. So the recommendation that comes out for me is completely warped and it's completely unusable. But I guess these are things that will also get ironed out in the future. Thank you so much for your time, Sanjeev. I think that we've taken more than the hour that we'd asked of you. If we have several more questions to ask, but I think that it would be unfair to keep you any longer. It's been a real pleasure to understand the depth of the business that Bajaj Finance and Bajaj Finserv and Allianz and General Insurance get into, and the way that you actually do see the business evolving. Your role in being able to provide a full spectrum of services to your customers is truly something that will be path-breaking for India, especially on a mode and a medium, which is the future. So firstly, congratulations. And from a personal behalf, thank you very much for being here. It really is a pleasure. And we couldn't have got anyone better for our Golden Jubilee IMA Speaks speaker series. So thank you very much for being here, Sanjeev. And thank you, ladies and gentlemen. I will pass on all the questions that you've sent to Sanjeev so that he does know what you've asked and who's asked them. Thank you again. And back to you, Rekha, if you're still here, or if not, we can close this session.
No, I'm very much here. Thanks, Nikhil. And thank you for summing it up so well. Thank you, Sanjeev. It's been a fabulous session. And if you get we'll send you the comments on the chat box. Everybody is absolutely thrilled with it. So thank you for making our 50th program so very special. I'll be very happy to pass on the YouTube video. I think more people should watch this session and more people should gain more knowledge about financial services. So thank you so much. And I hope you'll keep honoring us by coming onto the IMA platform again and again.
Thank you both. And thank you once again for inviting me. I enjoyed this fireside chat as well. And yes, let's hope in the future we can do it in person. Thanks.
Yes, absolutely. Thank you. Bye-bye. Thank you, everybody. Thanks a lot for joining us, all of you. And we look forward to having you with us for the next Leaders Speak session on 17th